you guys, so you can educate your clients and make you the center of influence for your clients when it comes to real estate financing, real estate needs, bankruptcy. You won't be the pro at bankruptcy, but now you have someone in your Rolodex that you can call and talk to about those issues when your clients have questions. So again, over the last 15 years, helping clients with real estate financing, it was easy 3-4 years ago. As long as they had a pulse and they could breathe, hey, let's give them a loan. That wasn't good times. And, one thing about PNC Bank actually got out of the mortgage business in 2001. And you know why? Because they saw the writing on the wall that there was going to be some loans done that they wouldn't want in their books. We didn't get back into the industry until 2008. When the dust settled and it came back to standard operating practices and underwriting practices. So with that in mind, we want to help your clients buy that next home. Is that good or good? Yes. All right, great. One of the most important things, I'm going to give you a few timelines, and so you may want to take some notes, and I'll definitely be here for the Q&A. But a couple of things you want to remember. I'm going to give you a 1-year timeline. Who can buy a property 1 year after bankruptcy? Which client can buy a property 2 years after bankruptcy? Which client can buy a property 3 years, etc. So those are important milestones, because that's where you, the real estate professional, comes in handy with that client. That client is relying on you to keep them in check, to help them and stay with them over the next 12 months, 2 years, 3 years, 4 years. And you say, okay, it's time, it's been a year, you can buy a house now. So that 1-year option, that sounds really good, right? All right, we want to help our clients buy a property as soon as possible, and we want to loan that money as soon as possible. Well, we got to make sure that they're ready. So that 1-year option is great for FHA, okay? And that's for particular circumstances. So the 1-year option works under FHA 1 year after the bankruptcy is discharged. Your client may be able to qualify for an FHA loan, and the way that they can do that is certain circumstances. For example, if it's a medical injury, if that was part of the cause for their bankruptcy, 1 year after that bankruptcy discharge of a Chapter 7 or 11, they can obtain an FHA loan. If for a particular reason, if it had to deal with their income, okay? So let's say, for example, self-employed, auto mechanic, his business went down with the market, he had to file bankruptcy, but then he ended up working for a huge conglomerate like BMW as a mechanic. Now he has stable employment because now he's a salaried client instead of a self-employed that shows no income that filed bankruptcy. So now FHA will say, hey, this guy's pretty stable now. He's working for a company that's been around for a couple hundred years, and well, over 100 years, and we will now feel comfortable loaning him money 12 months after bankruptcy, okay? So for the 2-year option, FHA could also work after 2 years of dismissal. I'm sorry, 2 years after Chapter 13 payoff is discharged, okay? Or Chapter 13 bankruptcy is discharged. They can qualify for 2 years, after 2 years of the discharge. For the 4-year option, you're going to look at conventional financing. So 4 years after the bankruptcy, your client may be able to qualify for a conventional home loan. Okay, so those are your milestones there. And with all that in mind, over that 12 months, 24 months, 48 months, your client really needs to look at rebuilding their credit, okay? So there's a few ways that I recommend, and what I've seen over the last few years, over the last 15 years I've been in the business, there are a few ways to rebuild that credit. Secured credit cards, or we've seen those before, but try to keep it manageable. Those with low interest rates, and we want to definitely, tell our clients, hey, when you get the bill, pay it off as soon as you get it. Just make that credit healthy again. Another way to do it is secured loans from community banks or even credit unions. So an example of that would be, I go to a credit union with $500, I buy a CD or put money in a CD for 12 months for $500. Now I ask that credit union to loan me $400 and utilize my CD as collateral. So what does that do? Now that gives them an installment debt history. Instead of credit cards being revolving with higher interest rates, now they have an installment debt history that will appear on their credit report after 12 months. So the question then becomes, okay, well, wait a minute, they have to pay that thing off in 12 months or 24 months. Well, work with the credit union, they can make it an interest-only payment, okay? And then at the end of that 12 months, when the payoff is due for the remaining balance, guess what? They can use that CD that they utilize as their secured, for the secured loan, use that CD to pay off that debt, okay? Because that's what they use as security for that loan. So that builds up your installment credit history. The debit card or secured credit card will build up the revolving history. And you want to have at least 3 to 4 trade lines in that manner. When I was young and in college, my mother wouldn't help me buy a car. She said, you got to buy it yourself. So she taught me what I needed to do. So I said, well, wait a minute. How about if I take that same $500 that I use at that credit union, borrow $400, and then that $400 they give me back, I buy another CD at $400, and then I get that money as a loan, and I buy another one at $300. Guess what? I just used the same $500 to establish 3 different lines of installment debt payments. Okay, but my credit union was pretty cool because my dad worked for the steel mill. I'm from Illinois, and they were like, you know what? It's enough security here. He doesn't have to make the payments for 12 months. We're just going to make it a one payment, one balloon payment due at the end. And guess what? I didn't have to make any money or pay anything because they paid them off with the secured CDs. So if you're working with smaller banking institutions, yes, I work for the 5th largest bank in the nation, but again, my job here is to educate you. Work with your community banks, and those are the people that are going to help you rebuild your client's credit, okay? And those will also be great resources for referrals for real estate agents. Just imagine you walk in the door with a client and say, hi, Mr. Banker, my client needs a secured loan. Oh, by the way, I'm a real estate agent in the area. Here's my business card. If I come across any other clients, I'll be sure to refer them your way. Is that good or good?
Yes.
Great. All right. And what that also builds is community awareness, okay? Now you have partners. Now you have a bankruptcy attorneys in your Rolodex, you have a banker in your Rolodex, you have a mortgage professional like myself in your Rolodex, you know, and you're building your database of people and professionals to work with. And that's how business really grows. It grows by referral, okay? And your clients are going to love you for, number one, introducing them to a bankruptcy attorney that can help them, or just giving them the clip notes that you got today and saying, hey, here's some information that I want to pass along to you. They're going to remember you through day in and day out, all right? So I'll definitely be able to answer any questions you may have with that, but at this time I do want to introduce our last speaker for today, and his name is Ray Matrega. He's from Inspire Insurance. Inspire Insurance has been around since early 1925, and he's here to discuss insurance solutions for you and your clients. And let's give a round of applause for Ray.
Thanks, Lamont. First, I want to thank San Gabriel Valley Board of Realtors for allowing us to be here today, and the law offices of Steers and Associates for inviting us. It just shows their commitment to their clients, whether it's the people that are in this room or the clients that you help. It's to have a 360-degree view of everything that you need covered. They're interested in that. They not only are going to help people, you know, get rid of dollars they can't pay for anymore, whether it's their home or whatever, but they can also help them with making sure that they're covered. The homes are covered, their children are covered, they have ways to have solutions for the future. So just thank you very much. I'm a broker, just like you. I've been a broker for like 20 years. Things have really changed in the industry, and the way we market's really changed, you know. Before we were just always trying to market to people to get them to list their house with us, you know. Now we're using NOD lists to find people that are in trouble in bankruptcy to help them get a short sale going. So that's why you're gonna run into a lot of people that are facing